Welcome to the Travelex Weekly Outlook. It's the 1st of November and the dollar's off to a mixed start. The dollar did get knocked lower against some of the higher yielding currencies after some positive data from around the globe helped to revive some risk appetites. But the dollar rebounded off some earlier lows against its European and Japanese rivals, getting a boost from some positive U.S. data on the manufacturing sector. The U.S. ISM report for the month of October, that was one of the last U.S. reports ahead of this week's Fed meeting. And with the report coming out stronger than expected, that helped investors kind of pair some of their bets for aggressive Fed action to revive a sluggish U.S. economy. Going back to last week, the dollar had turned in more of a mixed performance. We did see the dollar fall a bit on some weaker than expected data, which helped pave the way for more Fed support in the coming days. We saw that U.S. growth during the third quarter. That grew modestly from the quarter before, as expected, but it was still largely seen as too sluggish to help bring down the U.S. jobless rate, which remains stubbornly high, around 10%. Now the Fed does seem on track to provide more monetary easing measures to help the U.S. economy. Come Wednesday, it'll be key for the dollar to basically the extent to which the Fed might provide more support. If the Fed comes with a more aggressive action to the tune of anywhere between $500 billion to upwards to $1 trillion or more, that will be key for the dollar. In fact, the more the easing the Fed provides, if they do more than that, that obviously could do more harm to the dollar. The whole aim of the Fed's program to stimulate the economy is to help flood the market with greenbacks. By doing so, they hope that that will bring down interest rates, and that has been at the heart of the dollar's decline. Now, if the Fed, if they decide to provide less easing than the market is considering at this point, that could potentially help the dollar piece together a rebound off its recent lows that we have seen. In addition to the Fed meeting on Wednesday, other central banks meet on Tuesday. The RBA meets, and then on Thursday, the Bank of England and also the ECB meet to consider monetary policy. And then toward the end of the week, the Japanese central bank meets. That is a meeting that was actually revised or upwardly moved to this week from mid-November, and that has investors on alert for the possibility that Japanese authorities could take action to possibly weaken the yen. And that depends all on how the yen fares in the wake of the Fed's FOMC announcement on Wednesday. And then once we get past the Fed meeting come Wednesday, investors will really shift their attention to Friday. That's when the non-farm payrolls report for the month of October is due out. So all these central bank meetings this week, and in addition to the U.S. jobs data, that really has the potential to set the course for the dollar for the foreseeable future. That's all we have for this week. For the latest on the dollar and the currency markets, please check us out online.